Japan's new economic experiment under Prime Minister Sanae Takaichi, quickly dubbed Takaichinomics, is stirring debate across political and financial circles. Promising to fight inflation, boost defense, cut taxes, and protect domestic industries, her plan is a mixture of ambition and contradiction. What was meant to be a bold new direction now risks pushing Japan into a zone of policy incoherence. A nation at a crossroads. Japan enters this phase burdened with the world's highest public debt, an aging population, and fragile growth prospects. Inflation, once elusive, has risen near 3%, modest globally but worrying for households long accustomed to stability. Against this backdrop, Takaichi vowed to make controlling inflation her top economic goal. Yet her fiscal and political decisions point in the opposite direction. A blend of contradictions. At the heart of Takaichinomics lies a puzzling contradiction. On one hand, the government proclaims the fight against inflation. On the other, it rolls out tax cuts, fuel subsidies, and defense spending increases. These measures inject more money into the economy, lifting demand and, consequently, prices, the very thing inflation control seeks to curb. Japan's public finances are already stretched, with debt exceeding 230% of GDP, yet fiscal stimulus keeps expanding. Adding to the tension is her stance on immigration. To tackle labor shortages, Japan's businesses call for more foreign workers. But Takaichi's preference for tighter immigration rules restricts labor supply, potentially driving wages and costs higher. That means inflation may rise even as the government claims to be suppressing it. Meanwhile, her remarks that interest rate hikes are unwise raise concerns over central bank independence. The Bank of Japan's delicate attempt to normalize monetary policy could clash with political pressure to keep rates low, further clouding Japan's inflation outlook and credibility. Economic and political ripple effects. Markets dislike confusion. Investors are uncertain whether Japan's economic engine will be driven by stimulus, restraint, or both at once. The yen has weakened, reflecting doubts about policy direction and expectations of continued loose monetary conditions. A weaker currency benefits exporters but hurts consumers through higher import prices, again fueling inflation. Politically, Takaichi's balancing act satisfies no one fully. Fiscal conservatives warn of a debt spiral. Growth advocates see little structural reform. Households face rising prices without matching wage growth. Her effort to please all factions inside the ruling Liberal Democratic Party may end up pleasing none, leaving Japan's long-term strategy adrift. The structural blind spot. The deeper problem is not short-term policy but structural inertia. Japan's true growth barriers, low productivity, rigid labor markets, and demographic decline, remain largely unaddressed. Instead of pursuing tough reforms, Takaichinomics doubles down on temporary fixes, subsidies, defense budgets, and popular tax cuts. These measures buy time but not transformation. Limiting immigration while aging accelerates also undermines Japan's competitiveness. With fewer workers and rising wage costs, companies face pressure to relocate or automate faster, deepening inequality and fiscal strain. The contradiction between economic reality and political rhetoric widens. The path forward. To restore coherence, Japan needs clearer priorities. If inflation control is paramount, fiscal expansion must pause, and the central bank must retain independence. If growth is the goal, structural reforms, labor flexibility, digital productivity, and selective immigration are essential. Trying to do both without coordination only fuels uncertainty. Fiscal responsibility should return to center stage. Defense spending and welfare obligations cannot both expand indefinitely on borrowed money. Credible medium-term consolidation, transparent communication, and consistent policy would rebuild investor trust and stabilize the yen. Conclusion. Takaichinomics captures Japan's current dilemma, the desire for revival colliding with the limits of reality. Takaichi's government aspires to combine inflation control, social protection, and military strength, but without a unifying strategy, the pieces don't fit. Unless Tokyo aligns its fiscal, monetary, and structural policies, the vision risks dissolving into confusion. Japan's economic story has long been one of resilience. Whether Takaichinomics becomes another lost experiment or a turning point toward coherence will depend on the government's willingness to trade political convenience for economic clarity.